Welcome everyone to our next panel. My name is Valentin, and let me share a few slides with you before we start the discussion, just to have everything in place. I don't know, yeah, do we see the screen perfect? Yeah, so our next panel will be on the Industry 4.0, the era of digital dollars and data-driven transactions. We at Digital Euro Association give special thanks to our standard members for supporting these panels. Without their help, this wouldn't be possible. And we have a great list of panelists today, and I'm happy to be hosting them. It's my first hosting session, so be patient with me. Before we start, let's do some housekeeping. The event is live streamed on YouTube. Please use the chat on YouTube to ask your questions. We'll try to collect them for the end of the session and ask them, but might also be able to ask the questions during the session. It depends on the topics you're covering with the questions. Other things, follow us on YouTube and don't miss any other live streams there. We're also very active on LinkedIn and on Twitter or X. Also, feel free to follow our panelists, but they will do the intros themselves. And yeah, before we start with any questions, I will ask you to introduce yourself by name, and I will start just as on the panel slide with Chi. Please introduce yourself, what you're doing. Yeah.
Okay, so I would start. My name is Ji Chen. So I have been working for Infineon for I think around even 20 years. So time flies very quickly. And we has been in the security division actually also very established and yeah, been serving this market for decades. And newly we have been looking into the schemes like a central bank digital currency. And quickly we recognized this kind of scheme could be, yeah, well utilized in also the industrial area. And actually also by coincidence, with Max, for example, I think 1 week ago, we have been talking about to utilize, to combine security and the so-called CBMT, commercial bank money token. So I think that's my responsibility. And we are glad here and also to with the other panelists to discuss how we could yeah, open this new area. And we are also here very pleased to take a feedback and also to contribute what is necessary. Maybe I, in this sense, also hand over to Max.
Yeah, thank you very much. Yeah, my name is Max Meischein. I'm with DZ Bank for like 20 years now. And in the past 3 or 4 years, I have been working on digital currencies, both kinds of digital currencies. That is, yeah, the digital euro by the ECB as a CBDC, and also on the commercial bank money token, which is, aims to bring commercial bank money onto chains. We are working there with other banks and with clients of our banks, mostly industrial partners, to bring money onto their corporate DLTs so that, yeah, they can unify the business process with the payment process. And yeah, last week, no, 2 weeks ago, we held a webinar on the CBMT, which is now even online. So you can also go and watch that afterwards. And yeah, now we are working on the report to get a written document on that as well. That's it from me. Please go on, Greg.
Well, thank you so much for having me. My name is Greg Bell. I'm with the HBAR Foundation, which is on a mission to grow the ecosystem of Hedera. Hedera is an enterprise-grade open source layer 1 proof of stake network. It's governed by some of the world's largest organizations, from global banks like Nomura to Boeing, IBM, Dell, Shinhan Bank, and Google, and many, many more. The network itself offers unmatched performance, security, and compliance for this thriving digital ecosystem and economies. It happens to be the most used public network in terms of transactions. and is EVM compatible, meaning it's programmable in several languages, including C++, JavaScript, and Solidity. Myself, having a background from Wall Street and then moving into the digital economy, I'm really excited about the ability to now bridge and bring together technology and where we're going in this digital currency age. And that's a little bit about myself and the HBAR Foundation. Thank you.
Last but not least, Alan.
Sure. Yeah, thank you very much for having me. Having us. So I'm Alan Peterson. I'm the CEO and co-founder of Eurodollar. And Eurodollar is quite simply a project to bring the digital dollar to life in Europe. We are, I would say, some months away, but over this year, we should be able to deliver a dollar on the EU regulation and a token dollar, and also deliver a number of liquidity solutions. That's basically what we've been building over the past year or 2 years. And yeah, that's what our business is, and we look forward to discussing how a regulated dollar or a regulated digital token here is helping bring forward or move things forward with some of these great applications that we're talking about here today. Thank you.
Thank you for the introductions. I guess for the audience, the first question would be more broader in terms of what is the industry 4.0 in terms of digital money and data-driven transactions. Could you briefly give an intro for the audience who are maybe new to the topic? What are we talking about here? Maybe Alan, you can start.
Yeah, sure. So the way we're thinking about it is really that we're at the cusp of a big change, basically. So far, we have digital dollars or digital money already. They sit on ledgers. They are created on ledgers in banks, and really they float on a digital version between the two, and everything is already digital. But what's going to happen now is it's going to be tokenized. So a lot of things starts changing. So basically, the bank's role starts changing. When I have $100 in Barclays, then I have a claim on Barclays. Now I want to send $100 to you. Then what happens is that I no longer have a $100 claim against Barclays, and instead you have a claim of $100 against HSBC or whatever your bank is. But that's how the banking industry exists today or works today. But now instead it'll be, me having a number of, tokens, USDC, Euro, whatever your favorite cryptocurrency is, and I'll be sending that to you. And that's the same claim against the same party that's moved forward into this. And instead of having clearing between many different banks, we can actually do it in one token. And if we need to, we can even clear more tokens. So there's a lot of new applications that happens as a result of that. And I think this V4, I would say it's unclear. Okay, it's not completely clear how it's going to pan out. I think what is good for people to have a mental image of how industrial revolutions work. There's a I don't know if there's a book by a lady called Carlota Perez called Technological Revolutions and Financial Capital, and it tries to explain how basically what are the dynamics and cycles in how you have changes in technology and how they get implemented into the overall general society. And a good part of that is explanation of the different phases. And the first phase is really a installation phase. It's the phase where the railroads gets implemented. Everybody gets railroad. There's a time where everybody gets internet implemented. There's a time where everybody is starting to figure out how to use cryptocurrencies. That's the installation phase. And there's basically in that phase a lot of people, or some people, who get rich, and there's a bubble forming from time to time. There may be multiple bubbles forming. And at some point, we get to a place where, okay, now the society, as in the regulators, the way people live, everything has figured out how this new technology is really going to work. And then usually in these particular situations, you see then a long-term growth until that particular technology gets overwhelmed by new technology, and it's sort of the cycle happens again. And I think what we can say about money right now is that we're in that phase, in that installation phase. We're trying to install cryptocurrencies or crypto technology and use it for money, replacing the old form of money or adding to the old form of money. And that's where we are right now. And that means if we are to derive any kind of sort of insight from the cycles that were before, that means we're at a place where we're going to get a lot of things wrong. We're going to test a lot of things out. And we're going to generally focus on how to be useful, right? That's the main test there really is, right? The test you want to do is okay, I've built this type of currency, I've built this type of token, built this. How can I make this useful? What can I do here? And I think right now we're at a stage where people are thinking a lot more about that, how to make it useful, because if you go not too long ago, the most usefulness of these tokens were really to allow people to generate arbitrage and largely gamble in the big crypto casino, right? Now we're trying to come up with cases where the usefulness for these tokens is different. They're in manufacturing, they're in supply chains, they're in payments, they're in many other places. And some of these will be wrong. But this is where we are right now in that stage. But the clear part is that what we can feel is that this usefulness, there is some usefulness to what we have here. The technology is not useless. There is usefulness. I think some of the other participants here will explain a lot more about that than I can. But there's clearly usefulness in a lot of key situations. We know a number of things that we're solving already. We know the banks and banks' relationships with money is problematic. There's an issue with they can blow up. There's an issue with motivations, as in because it's a pure upside option, as in the government will always step in and help them out. There are some issues there. So, okay, how are we coming in to solve that? Is it something with transparency, something with safety, security? How's that going to happen? We know that in the global societies, shadow banking is a big thing. And one of the things about true cryptocurrencies is it's definitely not in the shadow because it's public, and it's definitely not banking because it's just not a bank. So the idea that you can use this currency to get away, or at least shine some material light on what is today in the shadow in terms of instruments and transactions and so on, that honestly has giant societal value for everybody. And then we also know that there's something about cost. We know that there's security trading costs that can be taken out by using some of the inherent characteristics of crypto. There's international transfers and so on. So we have some pointers on where we can be useful, right? But that's really what will drive this next phase of installation, this phase of us installing the railway and figuring out where is the railway useful, right? As in, we know where we can deliver some value and so on. And we'll be working on it. But this is a number of years, okay? We're at a great place in Europe because we have a good regulation, or we have a good start of a regulation at least. So that's helping a lot with credibility, given the common customer, the common company, some comfort that these are actually appropriate financial products. You can put money into it. It's not dangerous. So if you feel that there's usefulness in them, you can move into them because you've got that kind of trust. So yeah, I'm very positive about that, and I'll look forward to hear over this discussion to talk much more about in this phase what are the many different clever and cool things that we're going to try to make this crypto technology useful.
I love, Alan, your description there of the installation phase, because I couldn't agree more. We're at this place in time where we're still building the foundational blocks in many ways. The broad support for wallet infrastructure, and as an example, across individuals and institutions is still something that is growing to enable these new rails to function. And I think when you look at what digital money needs to be, and the suitability of large scale industrial adoption, there's several things that need to be in place, and some of them are, and some of them are still being built out. But there needs to be security from a technical perspective, right? Money needs to be able to operate at the speed of the internet, at high speed, at low cost for transactions. Uptime needs to be there in terms of the functioning of the network. And so when I think about Hedera as a network, which is of course powered by its cryptocurrency HBAR and has native stable coins like USDC, I see speed in terms of the highest transaction throughput, both on an observed peak and average basis, and then the low cost transactions denominated in dollars at 100th of a cent, things that enable the plumbing of the ecosystem to work is really where technical designs can make a big difference. Ensuring that there aren't surge pricing, because at different points in time for movements of digital money, the cost of a transaction can't be prohibitive for the actual purchase activity that the user is trying to make. And so there's a number of different characteristics, but I'm really excited about where we are, because many of those foundational building blocks, that installation phase, is being laid, and it's being laid on a global basis in a scalable format. So the applications really are quite broad and very exciting.
Yeah, I find it, I really like this term of installation phase as well. But in the working group, we arrived not necessarily from the path of money to the crypto technology, but more driven by our customers, because they are moving some cross-company business processes onto DLTs. And yeah, this makes sense for them because yeah, they share some product or some intermediate results across companies. So having some kind of shared database is really important for them. But then they have to, yeah, go outside the system to make the payment. Then they have to do reconciliation, and whatever, the payment is not really the crucial part of the process, but it is a very tough break in the complete process that will continue after the payment. And so, yeah, the customers there see quite the value in using DLT, but they can't really, yeah, do prototypes until, yeah, they have a good way of payment and a good way of, yeah, also mitigating all the legal stuff that comes with introducing, yeah, something new into the company, and yeah, getting the treasury and risk managers to sign off on all of that. And yeah, that's where we as the CBMT working group came from, to, yeah, bring something like commercial bank money to the customers so that they can use and incorporate the money into their business process, which in some way means that, yes, the banks are not having their hands on the money anymore. It's now the customers who initiate the money transfer, and not tell the banks, please send some money over to your other bank so that I can pay my the other side of the transaction. But yeah, I see a lot of convergence there towards this technology, and yeah, that makes me confident that at least the goal is not that wrong, even though we arrive from different directions.
Yeah,
if I may take over. Sorry, Alan, please.
No, please. No, I just wanted to say, I just wanted to note that but Max, you're absolutely, you've got the hand in the long end of this, right? Because at the end of the day, we can do all kinds of technologies forever and ever. If there's no customer demand for it, well, who cares? So the fact that you have, access to customers who say we're willing to be frontier customers, we're willing to be the first ones here, that is a material gain, and that's what we need more of, right? And I think I want to very much be clear on the concept of we're in an industry that's in a place where we should be doing more co-optation than competition, right? Because in the grand scheme of things, be that stable coins, be that commercial bank money, whatever it is terribly tiny, right? It's very, very small in the grand scheme of things, right, today. So we are all at the beginning of it. So it makes sense to pool resources, pool whatever we have to move the industry generally forward. It's not about taking market share from each other. It's about growing the pie for everybody at this moment in time. I think that's a very important message for everybody to get clear. In this phase, we just need as many people into the system, see usefulness in what we deliver with the technology. And then at some point, yeah, we can start. I mean, those who are left at the other end can start competing. That's fine, Please, sorry.
Yes, exactly. Totally agree. I think it's by breaking new technology, it's not only part of competition, but also cooperation. Finally, maybe also with a partner, as cooperating, maybe there's no changes also in the whole value chain system, etc. And then I can totally agree with Alan's your statement and also with Mark's. And that's why also we came to the conversation together that unify the industry and unify the value chain stakeholder somehow from the beginning also to the end, and in total in a big scale to monitor this kind of movement, even push certain kind of innovation ideas. Because standalone, we could deliver certain component. Maybe you can deliver certain system, and from a commercial bank, they can deliver certain banking services. But this is only piece of the movement. And this kind of movement actually can go so deep, and one of us may not so completely in control. That's why I totally agree with the idea. And also we cooperate in this, in our dream somehow, always with a partner, and then to look more into the system. Maybe look more into the system and also in the end customer value. And to be very frank, I have been also personally be asked many times, what is real value? So talking about digital form, not only the digital form of money, then talking about the use case like industry 4.0, etc. And nowadays we have a lot of payment schemes, and maybe you have. That's why I asked this question. We have mobile payment, we have wearable on the watch, and all kinds of payment schemes. And also digital form, we have SEPA and all this kind of the system working digitally more or less. Yeah, and also I know we have some customer utilize bill per use cases to integrate separate use case finally into an automated way. But in a nutshell, I think it's also maybe our duty to bring to the community what is the key value of the thing we believe the best for the industry and so on. And this is somehow I so far do not get so much at it. And also a lot of customer and partners ask me and even challenging us, is this really is a future, and what is real value? What do you think?
I mean, the value proposition needs to be presented to each and every user, and that value proposition might be different depending on their use case as an individual or as a corporation. But that needs to be the driver, because as you said, there are so many different digital rails that are there. As the industry needs to live up to the promise of cheaper, faster, more secure, to be able to deliver something that is very clear and tangible why you choose to utilize a new technology.
Yes, but I take a little bit of objection with the cheaper. The payment itself does not have to be cheaper if we can integrate it to simplify the complete process. The payment itself is maybe 1 cent of a transaction, or maybe it is €1, but if we can save like €5 per transaction or per machine movement or whatever, the customers will happily pay that €1 and then negotiate later to bring that down. But it's not necessarily the point of getting from 1 cent per payment to 0.5 cent per payment or something like that. I mean, cheaper is always better, but I don't think that this is necessarily the deciding factor. It's more like, how can we address the complete process or a larger part of the process and not simply the tiny part of the payment to make things better, faster, more secure, or whatever the pain points are.
Yeah. So I think if I'm building on Max's here and the point from before, that one of the problems we have is that some of these advantages don't really appear very visible before we've done quite a lot of work. You know, it's like a huge undertaking. It's like, oh, I need to change all these contracts that's been built since the 1950s into systems and ways of doing it, or regulation, and up until now. So that's what, like, 75 years or so of work, global work of putting together structures. All this, before you can see the real change that I'm going to do in terms of cost, in terms of speed, safety, security, I need to rip all this out, and then you will see it. And that is one of our challenges, because it really is a system change, right? It's not my component will give you 2%. No, there are very few I can come up with where it says, okay, my component is going to give you exactly that. It's only when you have all these pieces together, and we suffer a little bit for it, right? It's a bit like, we invented the locomotive, but we needed, there's a lot of things that needed to happen before we see, oh my God, the railway is going to transform the complete industry, grow our economy. That did not happen before a whole lot of components were in and they were seen together, right? That's one of our challenges, I think. So but because I think we can all recognize that we have the same challenge, as in customers like, but tell me how much, how much am I saving, or how much faster are we talking, or so on. And you say, well, you need to use it in this way. I'm just a small cog. There's a whole thing you need to participate in. Otherwise, you're not going to see it. So I think that's I don't know what you guys think, but I think that's one of our industry challenges, really.
Well, it's almost like, there's the analogy of picking up pennies in front of a steamroller, right? If you're taking on risk of a technology where there is the security is maybe not as developed as it needs to be, then the reduction in transaction costs really means nothing if you're putting a larger balance at risk. And so now I think that we've made tremendous progress in terms of the laying of the rail lines over the last several years, and so now, as institutions begin to adopt and implement the technology, that's when customers will really start to see the power of the combined costs. So we're at a very exciting time.
Yeah. I think also you can say that some of the advantages are risk reduction, which is like that there's a certain amount of security in the fact that everything is backed. There's a certain security in the fact the way that the technical open source data, all the pieces that were the IT piece of it, or the technical piece of it is as it is. But the problem is, it's very hard to make me, how can I visualize for you that you're now in a place that will have fewer disasters, it'll have fewer blow-up events, it'll have fewer this and that. Those are very hard to visualize. So the fact that this becomes a more secure and transparent place those are hard to say, and that gives you $5. Or you know, it's very hard to make. So some of these changes that's happening in the are just hard to visualize or hard to explain very clearly. But yeah, a lot of it has to, I find, a lot of it has to do with these safety and security pieces. This is just a better way of putting things together. It's a more secure way of doing some of these things. I don't know if you, what people think.
This totally, I can agree totally this proposal. And I have an example actually doing this kind of security stuff daily, let's say, to say usually people would only sense the needs of security when they lose something broken, something's hacked. Oh, I have the loss and feel it. Otherwise, beforehand, usually they don't, users, etc. They don't think about that. But in this kind of recent time, for example, in the war in the front, and we are talking about industry, and the industry like critical infrastructure, also industry, to produce something critical like energy or kind of operating in the node, etc. This critical infrastructure are now more and more under attack. Not only the physical like bomb, etc. in the one front, but also the cyber attacks. So there are the dedicated cyber attacks from organized attackers, whatever these sources are coming, attack explicitly this kind of critical infrastructure and then put all the infrastructure just down, put it down. And I think this is also one of the scheme in the resilience aspect, also the digital operational resilience, to have our system more stable, robust against this kind of attack scenarios. And then this EU has been doing that, and maybe finally it's also up to us to implement in the way that our customer sense the value, and because they are also seeing that, because they are also currently, some of them suffer from that kind of attacks. Maybe an example to visualize this kind of situation and the win and the benefit. Since no pain, no gain. So this is currently we can see, and hopefully it does not expand in the bigger scale, hopefully, but who knows, how it ends.
In many ways, it's how you drive trust and credibility in a technology or a core infrastructure. And that does happen over time. You know, it's a building block. It does happen as things are tested and as users begin to utilize the technology. And then from Hedera's perspective, you know, we also approach that through, you know, our governing council, where, you know, the world's largest global institutions are actually validating transactions. And so you have greater assurance around the governance structure. You have greater trust in the entities that are validating versus unknown individual users. And I think that leads to some of the industrial use cases. And so it is a challenge that collectively all networks, you know, and the interoperability of those networks are addressing. But as we get real use cases, it becomes so much more tangible, and that's really where we are. We're in a place now where, you know, proof of concepts have been tested. You know, an individual can operate at a speed that's very different from an organization or an industry as a whole. And there's different expectations of an industry and of an institution. And so, you know, the pace and the thoughtful approach that institutions have taken to being able to deploy the technology for their customers' benefit is now being realized.
Let me play as your potential customer and say, my biggest competitor is also using the same infrastructure, and I'm afraid that they might see my data. So I'm going towards security, core privacy. How do we ensure on shared data ledgers that competitors don't benefit from the data that's stored on these shared DOTs? If you can elaborate or give an example.
Yeah, in the CBMT working group, we looked at different technologies like Corda and also Ethereum VM. And well, Corda is quite good at privacy, and Ethereum is far more convenient than Corda. But what we found out while discussing exactly this issue with the customers, that not every transaction needs the same level of privacy. So yeah, we kind of left this open in the sense of if the network that the customers are using is good enough for the rest of their business process, it will certainly also be good enough for the money transactions. And yeah, one really good example for me, or a really striking example for me, was that yeah, in the chemical industry, you have some boutique engineering bureaus, and even being in contact with that engineering bureau means you are working on this or that chemical process, or you are developing something very special. And yeah, not even that contact may become public because it's yeah, a sure sign to your competitors that you are moving in a certain direction. On the other hand, if you are delivering screws or gallons of paint weekly, there is not even that much to be gained from even the price you are paying for one train full of paint, because most likely the bid was public anyway, and the rough market price is also known. So there is nothing or not much to be gained from having or demanding enhanced privacy. But it really depends on the business case or the exact business process you are implementing. And yeah.
And there's so many benefits to having the customizability of what you want to be private and what you want to be open, because there is in some cases having everybody operate on a open singular source of truth provides downstream benefits. At Hedera, we just passed 50 billion transactions. That's about 19 to 20 times that of Ethereum in terms of the transaction count. The large portion of those transactions are related to supply chain monitoring and supply. These are businesses, they have different levels of privacy requirements for their supply chain, and it can be addressed through the use of private networks like Corda that then have interoperability to Hedera or other networks. And it can also be addressed through hashing and encoding or encrypting information on chain that then can be decrypted. And so just because something is on chain and public doesn't mean that the actual information that is there is also public. It can be customized to the privacy needs of a specific application.
If I may take this example, so using our personal daily life, we call it in the crypto world called the zero knowledge proof. What is meant, for example, I want to show a certain system I'm grown, I'm more than 18. Usually, I would expose my birthday information to the system, and system checks if validated or not. In this way, I expose my information. But there's also crypto-wise another way to not showing my birthday, my personal information, but system still recognize I'm grew up. So this is solved in a way we call that's why the zero knowledge proof, the meaning the customers, also the stakeholders, in also mapping to the industry cases, they must not expose their real value and the raw data to a system. Instead of that, we will utilize certain protocol and cryptographic functions and still to make and enable their interaction with other customers. Yeah, so this is what Greg has said, and we have also daily in our practical way or product level or certain scheme to support this kind of utilization.
Maybe also, since we're on the technology level, and also maybe touching on the industry topic, can you give again another example of how these technologies are being integrated into industry supply chains? We know payments is a big part of it. Is traceability one of these as well, or a few other examples?
I'll kick that one off, and then others can jump in. I think, we're seeing, of course, there's a lot of examples historically that are native in the crypto market for payments. Whether that's related to the casino, as people have called it. But we're seeing increasing use in cross-border remittance, receivables financing. An example, there's a company called FSCO, which is in the Hedera ecosystem. They're also working with MasterCard. And they do receivables financing, and they're using USDC to make payments and enable credit. And so when you create a digital representation of your supply chain or of your manufacturing process, what you're able to do is you're able to move that very quickly. You're able to validate and trust the source and audit the source of that asset through a process. And you're able to then inject layers of liquidity through receivables financing in a way that can be challenging in the past. And so I think that's what FSCO is doing is a great example of a real world application of taking a supply chain and providing a means to have there be greater liquidity through financing.
And here, I think it's also, again, interesting if you have that transparency that financing is coming through, then you can either show that or even sell that liquidity in the future. So that's another point for being very selective about what you make private and what you keep public, because there are, as Greg already said, very many benefits of being open. And I think that's another good point.
But from the credit perspective, right? There's largely two sort of styles of credit that can be offered. There's income-based financing, and there's asset-based financing in many, if you were to sort of bucket the two broadly. And through creating digital twins or tokenizing different components of this, you're able to take a more of a trusted asset-based financing approach. And that typically comes at a lower cost structure. And obviously, there's always nuance and specific scenarios. But you're now opening up a market, or the potential for the development of a market, in a way that wasn't as easily executed. And I think that's a very compelling when you're able to make an asset more productive by being able to utilize it as collateral, or utilizing it as a data source, or utilizing it as an audit trail. All of a sudden, that piece of information is more powerful. And that's where, cryptocurrency, blockchain, DLT really has a real strength in the transparency of that information.
Using this data and having this availability, I just want to also touch on the topic of AI, because this week even OpenAI offered their new model. But do you see any the ongoing wave of AI being coupled with digital current money in manufacturing processes? Any promising use cases that stand out to you, maybe ideas? Because it's a hot topic.
So I'll jump on this one as well. I think there are three things that I see: automation of payments. I see real-time settlement of transactions that can be AI powered for supply chain, using that logic. And then the creation of digital twins for an asset. And sort of going back to what I was previously discussing, once there's a digital format of it, there's many different things that you can do. And AI enables just logic to be applied to money in a way that that really hasn't been done before. And from our perspective, Hedera is a great tool for that because of its, high throughput, low latency, transaction finality in 3.5 seconds, and to be able to have through over the last year 100% uptime with high transaction volume, you can do so much. So the second you start programming and making automatic payments at a micro level, you need the foundational networks to be highly interoperable and capable of very high transaction throughput. And that's what's occurring in terms of individual networks and the ability to interact across these networks for specific use cases. So there's plenty of AI overlap. And then, of course, there's the authenticity of that data, which is, I think, a huge AI topic, where whether it's driven by fake news or fake content, people want to know where, when, and how content was generated. And if only we had these machines that were trustworthy, that were the source of truth, like DLTs, to be able to help address that problem. So there's a lot of innovation, a lot of smart people that are working towards that intersection of AI and blockchain.
It feels to me like AI is certainly doing a lot of things that allows us to optimize business processes. Basically conduct your business faster, better by utilizing AI. And to a large degree, the currencies, the cryptocurrencies, the moving of money is somewhat a servant to these business processes, right? We are not the business process, we are a servant. But the fact that we have put it in a format and a situation where actually whatever actions you take in the business processes that are driven by AI, hey, you can also drive those into whatever you're doing on the currency level, on the money movements as well, and potentially even have an AI layer there as well to say, okay, we also want you to intelligently allocate the few funds you have to the right parties there. So I think there's a lot of there, but I feel like we'll get there, but I feel we're still in the place of putting some of the components in place. But I feel like when we start seeing more large scale movements and like, okay, these AI is truly generating new business processes, truly making changes in how businesses and manufacturing and supply chains are managed. Well, then at that point in time, we'll also have the layer for money ready to be able to service that. So it's sort of like we're going to be a second order effect, or we'll a lot of it will affect us from a second order, as in we're basically ready to support it when it comes. And then honestly, having tokens, having layer 2, having all these instruments are going to mean that will be the primary way to move money around, because it would be hard potentially, as far as I can tell, to do that in the existing infrastructure that really exists in the financial system. It does not make sense to try and take the existing financial infrastructure and make it sort of ready to work in this particular way that supports all these AI changes that could be in business processes, supply chains, and whatnot. At that point in time, it'll be, well, we want to make this happen, and the only way we can service that with money is going to be to this new infrastructure. So I think it's going to help drive a lot of this forward as we start seeing these big changes, because I just don't think today's financial infrastructure will be able to truly follow when the big changes starts happening.
Maybe I take the keyword of infrastructure aspect and also in the context of industry. So so from our view, we have also considering this AI a lot internally. So we could generally see this in a two way. One is talking about processing of data, which is already there. Data driven, it's a lot of industry data, machine learning data, from the history data to let the machine to deal with that. This is talking about handling the existing data, digitalize. Actually, also the GPT is a language model to transfer the information digitalized in a way that more related to your needs, to your questions. And the second way is to give the AI more touch to the real world. how it is to be understood. So actually the newest, I think 2 days ago, the OpenAI introduced the newest model. It's called the 4.0, GPT 4.0. And the AI can recognize the audio and video kind of signal. And this is already a first touch to the real world. So finally, as we as a human interact with the real world, we will sense it. It's a temperature, it's a distance, we see it. It could be that in the industrial world, a lot of sensors. And these are the data and sensor-based value more attached to a real world. And then how to deal with that. And finally, the machine itself is more intelligent based on these real world data to capture what is going on and then finally make a decision accordingly. In this sense, we believe also this is called edge computing, edge AI is getting more and more important. And finally, this edge node has more decision powers because they are more intelligent. They know even sometimes better than a human being, can sense better, can know the pressure, can know the distance, all these things better than a human being, more precise, and make a smarter decision, in predictive sometimes. So this is what we also work a lot into in these years, but also in new future into these kind of directions. And then as a second step, if this kind of end node or edge node is getting more intelligent and also more condensed, and then I think also reasonably all the business process may be also related to based on this new intelligence, including payment, including any kind of additional business processes. And then it's a different world. A machine maybe installed in a fab can know predictive, I need the spare parts, I will order it. And then perhaps that happens, based on this new technology, we could utilize that. What be our vision and the view to this topic?
So if the machine purchase parts for me, it will need probably a wallet. And the topic of digital twins came up a few times during the conversation. And I guess big part of all of these are secure elements and security, storing private keys, maybe biometrics. Can you elaborate on the role of secure elements in digital payments for the industry? If you can cover this topic.
Sure. So very roughly, I mean, that is also the open stage for everybody. But if we would tangle that from our secure element view, actually that is already in some way we now have our pocket. So it's usually like for the payment we have payment card, and we have mobile phone at the secure element in there, and also other devices. And this kind of device we could also utilize in the way that for this kind of machine, if the machine-to-machine communication and the machine-to-machine transactions. And we believe also the hardware-based security could play a role there. And in general, so this is the direction we could think about. On the other side, we could think about or consider is there are already some schemes there. So for example, in machines, we have TPM, or in machines nowadays, we have eSIM. There are a lot of similar devices which also taking care of security operations. So for remote access, for example, typically eSIM is trust angle. You authenticate with eSIM, and then you are allowed to do a remote maintenance. So these kind of schemes are there. Then the question is how our wallet and the payment scheme could eventually maybe convergent to existing scheme, maybe introduce kind of a new authentication possibilities. And this is something maybe in the detailed and the working group level we have to figure out, because the system somehow is already there, or some system already utilize let's say existing security protocol, and how we could bring our transaction and payment scheme into this existing system would be a question. Yeah. If we could, if this explains somehow the next steps of, but in general, the secure element role, I think in the industry is overall recognized as a trust angle to host secure operations. What do you think? What do you think is a value of the secure element is in this new payment scheme?
Yeah, just like you said, G, it is the trust anchor for secure computation. And I think you really need this for resilience, because if you're offline and want to do a transaction with a bearer-like token, like some kind of digital cash, like the digital euro might be, or maybe if you are in a fab where there is no Wi-Fi or no kind of outside connection allowed, you need something to do a calculation, but also to prevent double spending. And there you need to trust something, and trusting a secure element is, I think, so far the best we've come up with. And so I don't see any way around using secure elements, at least if you cannot guarantee 100% connectivity, or let's put it differently, if payment is important and there are no more important things that do not work, then you need a secure element to make the payment work in an offline situation.
Well, tamper-proof or immutable systems, I think that on the protocol level are proving themselves out to be extremely effective tools for recording in an immutable way information that can be transactions or otherwise. And then there is on the sort of the edges, the wallet infrastructure. And there's a whole industry here. But taking my personal needs, when I think about my fiat, I'm okay with a couple of dollars or euros in my leather-bound wallet, but I don't want all my money there because it's a security risk. I want it to be held at a bank. And so that same customization of how you can control, your keys or your assets or your exposure is an area where I think there's a tremendous amount of development being done, but then also educating institutions and/or retail users of how they approach that, because there's so much you can do with multi-sig, with different biometric components to secure your assets, but they come at costs and at benefits, right? You can have your assets that are sitting under lock and key under a mountain with guards, and it can be extremely, extremely secure. Not the greatest if you have to wait for a guard to go into a mountain if you want a cup of coffee. And so there are different dimensions of that trade-off. But the exciting thing is it's there, right? The ability to have those managed trade-offs is there, and institutions or users are now being educated on the choices that are made available to them.
Yeah, taking this biometric aspect, actually, this is exactly we have been talking about privacy and user credential, all these kind of aspects. And actually, in EU room, it is I think it is a very good example to really focus on this user aspect. Not every other space is taking care of so much, like data protection, GDPR, and all these kind of aspects. So, and we as well, so we want to safeguard our users. And typically we offer this kind of secure element to store the user. And then this is in control of the users. Usually the so-called AFI system, which store the data somewhere, somehow, and the user, by exploring all this biometric information, I think the user finally, they don't even know where this data can be even leaked or for purpose, even to make a business model out of that. And then this is a dangerous thing of this new technology. Maybe it offers certain convenience. The user just without paying, they can authenticate, but they also, on the same time, expose a lot of valuable information they cannot even restore. Their biometric is given. If they lose it, it's every time it's gone. So this kind of danger, I think from EU level, it's a lot of law and regulation, and also the consciousness in the industry, in the users, more or less in the system vendors, let's say. In the users, we have to see, and now especially the young generation, maybe they expose a lot of information in the social media. not so sure about the user concerns, but at least in the industry area, if we would like to utilize this kind of system and biometric authentication scheme, etc., I think in general in the EU room we feel the needs of privacy protection, and we could somehow with secure and safeguard that aspect.
And another angle on this, I think, is also a lot of the security, a lot of the safety, a lot of the things that come from this technology is in the technology. And I think if you come to things like money, a lot of the trust and security that lies in people expecting things to happen in the right way today comes from basically regulations and regulators saying this is how a bank must do things, this is what you must do, and so on and so forth. And I think a lot of those are not, I think the technology component in that has today a bank is very, very technology. There's a lot of technology in the bank. And I don't think the regulation has necessarily caught up with that. But I think it's good that not catching up with is getting even bigger today, because I think a lot of the safety and security and comfort that sits in this technology is not really put into some of the regulations or considered appropriately in, or too much in them, basically because there's a lack of potentially a lack of knowledge, potentially a lack of not entirely knowing how to put them in. But I think that's one of the areas that if we are to capture general customer trust, we're going to have to work with some parts of with regulation and with regulators to make sure that it gets right sized, and right sized means a place where it creates trust but doesn't disallow us from innovate, right? It's sort of the right size is where we can do things, but it retains some trust with the customer. And I think today, I think there's a lot of struggle or problems with creating that, because basically the technology is not, it's tough to understand. It's tough to bring into a regulator today and get that in and figure out, should we be regulating any of this? Should we have any requirements of this? What should we do here? What's good or what's bad? I think that's one of the areas where there's going to be a lot of sort of testing and trying out over the coming years. But I think that's a key barrier or mountain to cross.
Yeah, I think this is in a way on us as DLT users, that we need to make the processes and the technology understandable in a way that people, not necessarily my grandmother, but interested people can easily understand it and follow the ideas and also the process so well that they gain trust in the methods and the things we build with that. So yes, I fully concur. We do need to do more education and structure things in a way that are understandable and not necessarily we have a yearly APR of 30% or yearly yield of whatever. This, I mean, in my opinion, this does not build trust.
Yeah, I mean, I think at some point we're moving, and I do believe it's already begun, but we're moving away from everybody having to be a mechanic and know how the machine runs, and instead being able to get in the car and know that the car is going to take you from A to B and do so efficiently, and it's not gonna, you're not gonna lose and have a breakdown in the middle of the road. And that's where I think we need to get to for grandma and grandpa to be able to get into the car and just know that it's going to be able to get them from point A to B.
we are communicating over the TCP protocol, and nobody knows about that from the average person. So do you think that we need to reach the certain level where nobody cares about DOT and only care about integration and use cases to reach that certain level of adoption?
I think so. To move beyond enthusiasts to the general user, we shouldn't be thinking about, am I operating on, Ethereum or private chains, or all these things are really and should really appear in the background, right? I have a job to do, I have something I need done, and I should be able to do it in the best possible way. And fundamentally, all these things should be abstracted away, right? You should not need to, I need to move money from X to Y, or I need to set up the machinery such that my supply chain just basically make sure that money goes in the right direction as my goods move through this particular supply chain. All these things should be abstracted away. But at this moment in time, it's pulled forward, right? Because we are in this installation phase, this infrastructure stage where there are competing formats. I don't know, I wouldn't call them. There are many different formats, and probably it will be a multi-format world. But anyways, there's a lot of different ideas for how to, protect this, how to make this fast, how to do this in terms of the infrastructure. And I think at some point, most of them should be able to coexist and work, and you should not have to worry about all these things. But right now we do, because it's a bit like the world is figuring out, do we do VHS or Betamax of this particular thing, or what do we do, right? Or do we do, which one of the is it going to be? And then, oh, it's going to be VHS. Oh, fine. And let's just make sure that all the machines have VHS, and what you rent down in the movie store is VHS tapes, But these choices are upfront right now. Just like when, I don't know, but I remember in the 90s when you bought the first PC, you were thinking through so many things, like, what's my IO card? What's my graphic cards? There was tons of things that you needed to figure out and put together and change switches and do, install. And that was fine. That was at the frontier. That was the users that were there. That had to be done. All these things had to be done. So in the future, we've largely abstracted ourselves away. We get a laptop in front of it. It does Windows, Chrome OS, or it's all gone, But there is a necessary phase, I feel like, where we need to do all this frontier stuff,
Things have to be fun, and they have to work. You press the button on your Uber app, and the magic taxi arrives, or you want some food, and it just arrives at your front door. That's the experience. That's the UI side of it. And to your point on interoperability, it's so key, and I think it's becoming more and more of a focus for the industry as a whole. Certainly, Hedera has put a lot of time in terms of how it can interoperate with different networks, private and public, ensuring that there's the ability for programmers to interact with the protocol and code on the protocol without having to learn a new obscure programming language. You can't expect people to learn a whole new language just to be able to do something. And so the ability for there to be C++, Java, JavaScript, Go, and Solidity. So many people are writing in Solidity on Ethereum, and deploying smart contracts there. And then every network has its own strengths and weaknesses. And one of I think the weaknesses that has presented itself in Ethereum is the gas fees and surge pricing that can occur at different points in time. So you've written this amazing smart contract that can do things and make that magical experience. The taxi just arrives. Yet all of a sudden, the economics of that are such that, well, that taxi that was supposed to cost me $5 now costs me $100. Maybe I don't want that taxi anymore. I'll just walk. And so when you're able to take a smart contract written in Solidity and then redeploy it on another protocol, as you can do with Hedera, with EVM compatibility, EVM equivalence, then you're able to take advantage of the strengths of that network. And so that's where I think that there's a lot of progress in terms of this type of interoperability. And so you can for a specific use case, you can find a network that runs and then interoperates. So you can take the fractions of a cent, the hundredth of a cent, 0.0001 cent transaction that's constant and fixed, and deploy that same smart contract that's going to cost you $100. And now that $5 taxi is costing you $5 on Hedera plus 0.0001, And so that type of functionality, I think, is there, and there are many different networks and ways on specific use cases that can be deployed, and making it so that magic can happen, and how the technology enthusiasts can really get excited about, and find new and creative, efficient ways to process those. But it's not the requirement of the end user to know that.
I'd like to also take the metaphor of grandpa. So actually, we have been talking about this offline use case. If I could, take a chance to bring this, actually could be a good example to show, because not everybody, especially with these with limited, let's say, technical, let's say, basic knowledge, etc., they would like to check, and before each transaction, how good is my internet connection, all these kind of things. Yeah, I think in the basic idea to utilize, also covering, as you say, the use case, is that to offer more this kind of user accessibility, and kind of also enhance the usability, no matter how the underground and also the system and or the quality of the internet connection, all these things may look like. And I think this is also in the general principle of introducing a new scheme that that more users are covered, especially like in the CBDC, is covered as a public instrument. It's not only dedicated for certain user groups. And maybe finally, in the moment that our grandma is also using that, then we can say successful. Before that, surely I agree also with you, is that a lot of work has to be done. It's affecting a lot of systems, not only the final, in the user hand was handling, but also the backend processing system, settlement system, what Marx, also commercial bank is putting a lot of effort to utilize that. I think this is exactly what we finally also contribute, and so that our final user can easily grasp it and use it, would be my interpretation.
In terms of usability, where do we stand currently? Are we still in the Stone Age in terms of usability from customers' perspective?
I don't think we're in
Well,
Stone.
I think pretty much yes. I mean, for the end customer, a lot of this is pretty close to Stone Age stuff, honestly. If you think about the sleek interfaces we see for a lot of, usual apps and usual things, particularly if you start migrating to DeFi, from some of the CeFi products and so on, it gets more and more convoluted, to be honest. The things you need to know and understand just gets, entirely wild, honestly, some of it. So I think so. I mean, I'm sure a lot of people here are doing their best and all. So I'm just saying that what the general customer experience, I'm not saying the industry, if you are an industry user, well, I mean, you're willing to invest some more time in figuring out how to do it, how to configure things and so on. But for your average user who just needs something to pay with, or needs something that works for something, yeah, the user interfaces are quite, are not great, as in there's a lot of stuff you need to know before you start, playing around with it from, So I would say we're definitely in infancy there, which is great. I mean, that means there's plenty to do, which is good. This is awesome, innovative space.
I would say we're more in the industrial revolution. We're at that place where there's just a rapid scale of development. And at least that's what I hope we are, because there are still cogs. The good thing is that everything, a lot of our systems need to be backwards compatible. So much of our legacy money system it works, and it's globally. Things do take time. It's not a full-scale replacement. It's a migration. It's a migration of a technology or transition.
Yeah, I'm not sure whether it's Stone Age or maybe Industrial Revolution. I mean, we did 3 proof of concept things, not with real money, but we got 3 implementations off the ground within 6 months. So it is still possible to like cover the whole thing. Well, not myself, we had teams doing that, but within 6 months. So it's not a large scale project that needs lots of planning and lots of flowcharts and whatever, like say a power plant or something. So we are still at the stage where a single person can understand the whole thing. So in that sense, I'm not sure if it is already at the level of industrial revolution, but maybe the industrial revolution was in a way that a single person could still implement like a steam engine or something like that, or build it or have it built. So I think it's a good question.
Is it getting overwhelming because we see so many changes, not only on the blockchain, this DOT level, we have AI, we have biohacking. Are regulators or maybe also industry players getting overwhelmed with the whole technology development happening and following on everything? And especially for regulators, they need to make the right decisions, but everything is moving very fast in terms of technological development we're seeing.
Well, there can be so many different implementations, which is part of the benefit of a protocol, but also part of the challenge. When I think about our ecosystem, there are games that are built on Hedera. There are sports and entertainment applications. Karate Combat is a great example. The ability to interact and vote and bet on karate matches is so very different than a banking type of use case, yet the same protocol can be applied. Similarly, supply chain finance and carbon tracking. The carbon market is one that is developing, but it is a significant share of the Hedera's network ecosystem in terms of large global energy companies that are recording their carbon footprints throughout their supply chains. And so, it does get a lot in terms of all the various applications. But I think that's the incredible thing about the technology, and frankly, you can see it with money. Money is a similar type of thing that is applied to everything. And so when you have a core base layer, sometimes it's harder to understand because of that, because it's so flexible.
I would add to that. I mean, just that I think if you're a regulator, this must feel somewhat overwhelming. I think at this point in time, where there's so much infrastructure coming out, and it seems to be high quality, and a lot of money is being invested in it, and it's being used by, as everybody here is explained, by larger and larger players, which means, okay, well, I guess we need to do something about it. And it's then understanding that. And on top of that, you have the AI situation where there's also, how is that supposed to play in here? What's okay and what's not okay? There's that. So there is a lot of technology coming in right now, and not just trying to regulate around that particular technology, also taking a stance on that versus all the existing things that exist, right? Because it's not like in a vacuum. It's not like, okay, now we're now building a new financial infrastructure from scratch. We have to say, as you say, there's backward compatibleness. There's how does that fit versus a bank? Or how does that fit versus a asset management company? How does that fit? There's something you could build on, but there's also, how is this supposed to improve on that? Or how are we supposed to be thinking on that? So there's there's a lot of triangulations that's going to happen here, right? As in, I would imagine, and yeah, a lot of resources, honestly, that basically I don't know where it comes from, but resources that some of those who are supposed to create this trust in the society or give trust to the society by saying we are regulating and make sure not bad things are happening. Well, how do you know that is I would imagine that's a challenge right now. But hey, as I said, I really think if you go back to the various industrial revolutions, they must have felt the same. As in, like juices, there were horses. What? How do you want to think about this damn thing called a railway and a car? What's what are we going to do here? And over time, it was figured out. The pace is pretty heavy right now, though. I mean, the new things that are coming out are there's a lot. And it feels even heavier because there's so much money involved, right? As in, we're not just moving data around or anything. We're moving real high volume cash amounts around. It's not like if this goes wrong, it's not like, oh my God, we dropped some data. Oh my goodness, a billion disappeared. I don't know what happened here. So it's a very different feel from a society point of view, right? It's hard to go back and say, we made some tests here, but we lost $1 billion. I don't know where it went. It's just so there's I can see a lot of things that they have on their mind and thinking about how to do that. I think there's a lot of very high quality industry groups, like this one being one of them, right? Of course, the DEA, but there's other in other jurisdictions and other places that are doing a great job. And I mean, all we can do as industry is to try and help, right? As in saying, we can individually help, but we primarily want to help via various industry associations and say, I got to explain you what's going on here, regulator. This is what we as a collective group think. This is what we think you should be thinking about, please, and help us so we can get to a place where we have we're playing an appropriate societal role, and they are being able to execute their duties, which is to create a good environment for growth and people safety and money safety and so on. So I think, yeah, I have sympathies for where they are now. But on the other hand, that must be exciting, though, right? This is quite exciting. They're part of regulating what might become a big part of a new financial infrastructure in the world. They get a chance to rewrite a lot of things that has been this way since who knows when until now, right? So that's quite a big thing. Yeah, I would be excited about that, I think. I know what you guys think.
I think the excitement is why we are doing this stuff, isn't it? I mean, doing interesting stuff with new toys is always something. So yeah, and I mean,
I agree, and from a regulation perspective, I'm sure that this isn't the first time that they've encountered a new technology or a new system to function. At some point, the way we describe the rails will be obfuscated, and we'll just be back to this is currency and this is security. And so the regulators that are regulating securities will regulate a security. It doesn't matter whether that's recorded on a cusp in a database or on a DLT. And that's exciting. I think that there's the removal, it's a wrapper in many ways. It's a box, right? And you can put a lot of things in that box, which is in an empty cardboard box. You can put in a security, you can put in a dollar, you can put in a euro, it can be a stable coin, it can be a lot of different things, but then it's very efficient. In some ways, when it's wrapped, you get technology improvements, but you may lose some of the market infrastructure that is there. The depth of that market might not be as significant as it is in the traditional markets until the users start to migrate. And so the ability to take that asset out of the box and return it back to the other market and vice versa is key. But there's a lot of innovation that's being done in the securities and the currency realm and they're very interoperable, right? I mean, you think about securities, there is a whole section that are cash flowing. And so in order to have the cash flow as effective as we like it to be for this new wrapper, it needs to be in a digital format. So we need to solve the digital money side at the same time or in parallel with solving the security side. And I think that's also part of the challenge from a regulator's perspective, because they may know I have to regulate securities, and then I have to, how do I address this new technology, this new format? But ultimately, the wrapper of the technology does matter, because it's what enables the movement.
As we are approaching the end of our discussion, we have 5 minutes left. I guess I kept my most important question for the end. Looking ahead, what are the most critical actions industry stakeholders should take to support the transition to digital money? This is the big question. More investment, more development, more infrastructure? Any ideas?
At least in our case, I think the most important thing is now, to speak even more with our regulators and get approval that we are allowed to do experiments with real money. So but that brings us again back. How do we build trust? How do we structure and explain the system in a way that is understandable? And getting the regulators on board is, in my opinion, the most important step, at least for commercial bank money. I don't know how it is on the stablecoin side of the world.
So I think on the stablecoin side of the world, what we would say is, as you said, regulation is an important piece of the equation. There is MiCA in Europe, and that has, that's a really great starting point. It definitely is, and working with that, improving on that, suggesting, hey, maybe there could be more allowances for this in here, or maybe we could prove that way. So there's a lot of that, I think, has to happen as in working with that, and explaining what the role is of stablecoin, and why this is okay, that it could grow to a certain size, and so on. There are these things, but ultimately, I think the key part is, because we have there are large stable coins out in the world today, and people have a sort of instinctive idea of what the hell is this? Okay, it's a dollar, it's a euro, I kind of understand what this is. So there's that already there. So what I think is, I think what we should be doing right now is probably more on the collaboration end, which I honestly think the stable coins have not been terribly good at. We'll be frank, they are more competitive than they're collaborative, if you like. And I do think there is a need for us to try and build some more collaborations across, or trying to build more use cases for using it for payments, for engaging with, industrial applications, supply chain applications, and so on. But I do think all of these things could easily be built, rather than, I'm building one thing and they're building one thing. So I think we're still so small, and I don't think we're growing the market sufficiently before we start actually collaborating on saying, well, this is how it works. A little bit like, small banks in Denmark, Europe, whatever, did not really grow before they started to say, okay, we need a clearing bank, we need a regional bank. We start to figure out ways of collaborating that made it sort of a more useful thing that we had together, without killing the individual smaller pieces of it. So I think that's where that part of I hope that's where that part of the industry is, to gather more collaboration and understand that, just like it's a multi-banking world or multi-whatever, it's going to be a multi-stable coin. There's no, one winner rules them all. That's just not. I just don't see it how it can happen. So it's much better to try and work together at this size of the market. There's so much we need to do. So collaboration in all its forms with what you would call competitors, with regulators, with other ecosystem providers. The more you collaborate, the more useful your token will be, the more useful your stablecoin will be, honestly. That's my view. Yeah.
Yeah, I would also continue this idea of a collaboration. Actually, in the very beginning, we start with these keywords. We come together, and also this kind of chance to talk and exchange idea is a very valuable. So in this sense, thank you very much, Valentin, and also for the Digital Euro Association for this kind of opportunity to come together. And I believe also this is one of the key points because not a certain revolutionary technology, even thinking about the evolutionary technology, it takes decades to be really mature. And also in this decade, a lot of contribution from different angles may come, and then finally make it more mature. And if it's just happening by one turning off and by night, it's happening in the perfect way, it doesn't happen like that. So that's why I totally also believe the cooperation and this kind of conversation based on that, based on mutual needs, based on our knowledge and coming together and from end to end, from the beginning of the value chain and also finally in the final utilization, final customers, all these put through and also to penetrate and implement to the end, finally to bring the final user the value. I think this is only via conversation, only via collaboration can be reached. And thank you so much for this opportunity to exchange about this exciting area.
Yeah, it really has been a wonderful dialogue, and so thank you for hosting, certainly. And I think I would just to add to the sort of the message from the other panelists here. To the extent we are able to all prioritize the needs of our customers or needs of our users, whether we're B2B or B2C. I think that's where the issues, whether it's interoperability, whether it's regulatory, they will bubble up to the top and can be addressed because they will change. But to the extent we can put somebody else first, and rather than trying to carve up a pie but expand it, that certainly will help. And from our perspective, that's where some of the key things in Hedera that were developed for those very reasons. When embedded on the token level compliance configurations for KYC were created, it wasn't because Hedera felt that it was because a customer, another protocol and application said this is what really we need. And so it's responding to those needs. And I think that we can respond to the regulators, we can respond to our customers. That will improve the systems, improve the transaction throughput, the uptimes, the speed, etc. All of these things that will ultimately result in that magical experience. But I think that listening and putting our customers first.
And with that, we've reached the final minute of our conversation. Gentlemen, thank you very much for the fruitful discussion we had and the time you've taken. I think it came out great. We touched on very interesting points and so many viewpoints. So from me,